A little closer to the bottom of the MM's expected move than mine. Mine was just under VN, but definitely down for the day, selling off from this morning's open. I think the last of the upside positioning probably closing out with inflation actually coming in slightly hotter. It didn't come in as hot as the upper range for expectations, but it did come in above the median in analyst estimates, and so definitively hotter. Obviously, the 20 and 30 pushed up a little bit more, although they'd pre-priced in a bit of inflation, 10-year up a little bit more than that. And then the belly of the curve starting to swell again with reduced expectations for Fed rate cuts. The dollar moved up on this, which is going to obviously affect leverage. And we're already seeing some risk off in crypto that has been negatively correlated with the decline in the dollar. On ES, we slipped below the long-term trend, retested it, failed, and then slipped below, well, the extension of that long-term trend, I guess, is a more apt description, but did slip below that and slip below the prior all-time high. This marks one of our lowest closes for a few days at least, and does open up room to move to the downside and retest 62.52.75 off of the triple top at the high here, which did get breached a little bit this morning, and we did set a new all-time high. But I guess we'll see down here if we get a lower low. Dixie, moving up with the top end of the yield curve pretty sharply. Correlation continuing to break down. Back to the levels that we were at roughly around the time of the Iran-Israel conflict, and continuing to rise. We are hitting the lowest point in the share buyback period. We don't have tech earnings till next week, and the dispersion trade is very much overexposed to a rise in index vol due to events. And so while VX down today, VIX and VIX on the 3-month both up. Commodities mostly down across the board. Some upside moves in agriculture, but nothing too bullish there. Bond volatility has started to rise off of the lows. That should follow suit with the breakdown that we're seeing in 3-month correlation. As long as we continue to see correlation breakdown, bond volatility should continue to rise. Leverage in the carry trade hitting 9x. Literally the highest point it's been at since March 27th of this year. And we are seeing more demand on that forward yield and volatility, moving up to negative 10% after spending quite a bit of time down at like negative 15, negative 17. Skew continued to turn up yesterday, but we might see that start to reverse with today's price action to the downside, possibly more long puts coming in. Really no big changes in breadth yesterday. We'll see how that looks end of day today. I'm sure stacks above their 20 and 50 and 200-day moving average all fell with us pulling back 50 points. Correlation between VIX, cash VIX, still declining, and it's declining pretty rapidly. It's like almost 1% a day here. But volatility staying pretty flat. So, with VX flat and correlation falling, I would expect volatility to have a bit more potential to move to the upside. Fed fund futures cut back pretty significantly from, middle of 2026, moved from pricing in almost 5 rate cuts into June of next year, down to almost 3 rate cuts today. End of year rate cuts now falling below 2. And September just really not pricing in much of a rate cut at all at this point. Bear steepener, not too much, pretty flat. So we'll have to see what happens with PPI tomorrow. If we're going to see the bear steepener pick up, that's probably where we'd see it, is after PPI or with retail sales. If there's any indication that things are getting more stagflationary or recessionary, this is probably the indicator that would react to that most violently. Here, we have another failed breakout of bullish consolidation, but we do not have a failure of this upside consolidation yet. We still need to break below the 6,200 level to confirm a breakdown or a reversal, or at least signal one. And then to confirm it, we really need to get back below like the all-time high at 61.47. There's still a very good chance here that support could be found either at the 6200 level or at 61.47, where the prior all-time high was. That level has not been retested since it broke, and it is, I think, still of some significance. So we'll see what happens over the next couple of days. Obviously, this is the first indication of any kind of weakness in a few days, and the only one that's had the macro sentiment to back it up. So let's see where it goes. Obviously, weakness into the back half of this week could signal more downside into the end of the month, but we're probably gonna need to get a little bit more information. So PPI tomorrow, retail sales on Thursday, Michigan consumer sentiment Friday. All of these are going to feed into that. So this is still a pretty important week for data, and event vol is going to remain high. If that volatility is realized, I do expect that we will have a larger than usual uptick in volatility, because volatility is sold so short and so close to the money that I think the risk would become pronounced very, very quickly at our current levels. Did you give JB Hunt earnings are out? Yeah, probably. Yeah, looks like earnings per share was $1.31, beat by 1%. Revenues beat by 0.008 billion. EPS is down 1% year over year. Revenues down year over year. But quarter over quarter, EPS is up 12% and revenue is up. So bullish in the short term, but worse performance than last year, same time. Earnings were $1.31 a share. Revenue was $2.928 billion in profit, or in revenue rather. Anyway, thank you guys so much for tuning in. I appreciate it. I will see you tomorrow morning for PPI. Catch you later, guys. Peace.